Day Trading Radio presents a Briguy trading production.
Well, good evening, traders. This is Briguy here on daytradingradio.com, and we welcome you to Briguy's Tools of the Trade. Thank you for stopping by. Today's topic is the question, is it taboo to trade tragedies? Now, obviously the subject came to mind based on the tragic events of yesterday in Boston after the marathon. But it got me to thinking about some of the trades that I had on at the time, and actually put on a trade late yesterday that I closed out today for a profit. But it made me wonder about how other traders feel, and you guys as well feel about trading tragedies. There's actually not a whole lot written about it. In fact, if you were to do a search on the phrases trade tragedies, for example, or taboo trading, you get a whole lot of other subject matters. You get stories about folks trading and not having stops, or trading too big of an account, or too big of a position, or just psychological mistakes that people make while they're trading. But as far as this concept about trading around tragedies, do we do it, or do we consciously not do it? That's the question that's out there. There's a quote here that I got from the interwebs from Baron Rothschild. And Baron Rothschild said, "When there's blood in the street, I'm buying." Now, I didn't do enough a complete historical research on that quote to see what the circumstances were. It did say that it had to do with Napoleon's invasions, so it is a dated quote. And in today's application, you might have situations where there's not literally blood in the street to be buying, but it certainly does happen from time to time. So the purpose of the show here, I kind of threw that subject out earlier today, and I gave out my email address, which is actually looks like still scrolling across the screen, even though it's referencing the earlier show. I'll see if I can get that edited down. But if you guys have any thoughts that you'd like to contribute, just send me a private message or send me an email, and we'll work you into the show. If I just tell everybody to call in, I don't have a switchboard, so I can't put you on hold or things like that. So I ask you to bear with me as I'm actually producing the show and hosting the show at the same time. But what do you guys think? I mean, you could tell me in the chat room what you think. Do you find yourself steering away from trades when there are tragic events, or do you see them as opportunities to take trades? What do you guys feel about that? I can see some comments in the room, and just for those that are listening and maybe not in the trade room, I'm not going to call anybody out. You guys feel free to post what you'd like, and I'll just comment on it in random order here. And I see some people mentioning that greed has no conscience. That's absolutely right. And I see some people not too excited about the subject, so I'm glad that they actually stayed up, tuned in, so that they could not be excited about the subject. whatever works for you guys. Now, what I found interesting in doing some research on this is the concept of actual the word tragedy. And I had this definition here Give me a second while I bring it back up. And this is from, I believe it's from Merriam-Webster. Well, it's from dictionary.com anyway. And it explained that the term tragedy was originally stems from a serious drama in which a central character, usually an important heroic person, meets with disaster, either through some personal fault or through unavoidable circumstance. And the story then, the drama that plays out, is them working through that disaster. Of course, this dates back to ancient Greece, the works of Sophocles, Euripides, for example. Shakespeare included it in his writings, Hamlet, King Lear, Macbeth, Othello. You have Arthur Miller's tragedy, The Death of a Salesman, T.S. Eliot's Murder in a Cathedral. These are all tragedies. But of course, for you and I, we think of the word tragedy today, a tragic outcome. We're talking about disasters of many different kinds that are considered a tragedy. So, when you think about tragedies, do you find that you steer away from them? Well, I'll give you an example of some tragedies over the last number of years. If I mention the year 1989 to you, what comes to mind? Again, we have the traders in the room there. Maybe you can offer some input on that. What do you think of in 1989? Fowler was mentioning the Space Shuttle. That was actually 1986. I don't know if it also happened in 1989 because I know we had 2 issues with space shuttles, but I was actually taking my final exams. Might have been 87 actually. That's when I graduated, in 87. So a couple of you are mentioning Black Monday, and that's true. But in, let me see, I don't know if I had the month for this. 1989. Let me get the date reference. Now, I don't have a way of referencing a chart going back that far. So if you guys do, if you can either share a link with me or just look it up yourself. March 24th, 1989. There was a ship called the Exxon Valdez. Does that bring up any memories to folks? The Exxon Valdez ran aground on the Briguy Reef, resulting in what is now the second largest oil spill in United States history. The size of the spill was estimated at 40,900 to 120,000 cubic meter. Let's see, is that? Let me do it in gallons. I'm not familiar with the metric system. So it's 10.8 million to 32 million U.S. gallons. In 1989, the Exxon Valdez oil spill was listed as the 54th largest spill in history. So there you have it. You have the Exxon Valdez spill. And Kumar is asking where's Brian. So maybe Kumar, you got your... Of course, if I tell you that your audio is off, you're not going to hear me, right? So maybe you guys can let him know to turn his audio on. He probably muted Joe Walsh way back when, and he's concerned. So the Exxon Valdez. Let me actually, I could bring that on the screen here for you guys to see the article here. So at this time in 1989, if you were to purchase Exxon shares a month after the disaster. And just checking with you guys, you are hearing me okay, right? I'm pretty sure it's broadcasting. It is playing back through my laptop. And I get what you're saying, Average White Boy. Yes, the broadcast would appear to be very boring if you weren't hearing it. Anyway, so you guys work out the technical aspect on your end, and I will forge ahead. So here's a quote that I found. Investors who bought Exxon 1 month after the Valdez tanker ran aground have seen their shares appreciate nearly 800% in the ensuing 21 years. So that's from 83 up to 2004. Now this was an old quote here. Unless he did his math wrong, it should be 31 years, right? 1 carry the 2000. Yeah. 89, so it'll be 2010. That's when it was, 2010. Makes sense. So that's an example, really, of trading a tragedy. So the spill occurs, and I was 19 at the time. So to me, it was one of the biggest environmental disaster that I have been, news alert, let's say, in order to understand and appreciate what the gravity of it. I still remember the views of the animals coated in oil. I don't know if they have that in this article. Probably not. But you probably remember the otters and the animals coated with oil that they had to clean up. And that went on, of course, for a very long time. And Exxon was levied with some heavy fines as a result of that. But in the end, they weren't down forever, and Exxon came roaring back. And as I just mentioned, an 800% appreciation over 21 years. Not to mention all of the dividends that likely came out since then. Now that brings up, in the context of oil spills, you have what you guys may remember as the BP oil spill. So here's BP's chart. Can you tell when the oil spill occurred? We're talking about the Horizon platform in the Gulf of Mexico. So here, let's just come back here on the chart. We've got, this is a 20-year chart we're looking at. So BP in late 2006 is coming off the highs of 79.77. And we know about the financial crisis that occurred subsequently. And here's a gradual decline through 2007. And then here it's coming all the way back, 2008. And then all of a sudden you have April 20th, 2010. Let's see which candle happens to be April 20th. April, did I write that down right? April 20th. So this is April 20th, right where my crosshair is. And of course, when the announcement was made, it took some time for all the news to trickle out as to who was at fault and what was really going on. We knew about the disaster. BP, of course, was not taking blame. They were saying only so many gallons were leaking, not that much, and they had cameras actually right there. They had a solution in mind. They were going down there with these robotic arms, and they were going to cap the well. Everything would be fine. They're gonna pump some slurry into it, gonna close it up. And of course, we found out later that those things were not happening. Looks like somewhere along the way, BP had their earnings actually coming out and a dividend, but that didn't keep them from getting completely smashed from what appears to be somewhere up in the neighborhood of $60 all the way down to just a couple months later trading at $27.50. So what happened after that? if you were to wait 2 months after the disaster from April to June 20th and pick up shares of BP. Now I'm zooming out and the chart keeps resetting on me. I'm trying to get an appropriate zoom out. Look at that volume, by the way, coming in around this low, and there you see it moving up, reaches a peak up here of about $41, $41.50, comes back down. Probably if you threw a fib line on here, it's about a 50% retracement off the recent low, and then it continues on from there, trading up gradually. There it is at 50, and it's just not dragging fast enough here. And of course, BP's had some other problems since then. But the point is, here's this tragic event that happens that drives BP down, and subsequently you could profit from that pullback. We call it a pullback as traders. We say it's on a pullback. And many times we don't concern ourselves. If you're more of a technical trader, you may not even concern yourself with why it's pulling back. But fundamentally, you may look into it, and it could be something as simple as a change in CEOs, a misforecast, fewer sales than expected, the closing of stores, etc., etc. But really, when it comes down to it, many of those things could come in and be considered some type of a tragedy. And so you're picking it up in this range, or maybe you even wait until it's come back and broken over some of these moving averages. You could still put yourself in a position to profit from it. Let's switch over. Let's just look at the S&P. And hopefully mine doesn't have too much junk on the screen. Now, of course, we don't have a volume bar here on the S&P because it's not exactly it's not a tradable equity, just a reference. So let's back up and let's take a look at late 2010, early 2011. Okay? Here's the financial crisis. Is that a tragedy? The financial crisis, all through 2007 into 2008, until it finds support down here at around the famed 666 low and 79 cents. But even after that, let's go up here to 2010 and let's zoom in to this region here and consider early 2011. So let me actually back up further. Late 2010, early 2011. What's taken place in this region here? A lot of sideways action. Here's the drop off from April to May. Does anybody remember what happened back then? Look at this candle all the way down. Remember, we had all these huge movements daily. So the summer of 2010, does that ring a bell with anyone? Besides losing a lot of money, as somebody's mentioning. And I'm sorry if I'm missing some of your comments. Feel free to talk amongst yourselves, as it were. But put my name in your comment if you want to get my attention. I'm doing my best to keep up with all the reading. Well, this period of time here, in the summer of 2010, is what we sometimes refer to as the Arab Spring. And during this time is the crisis in the Middle East. There was the uprisings in Egypt, in Libya, in a lot of smaller countries in the area that you recognize them when you see them, but as I'm here even talking about, I'm trying to remember some of the smaller countries here. Border clashes in Israel, Kazakhstan, North Africa, Syria. Many of these things, in some considerations, are still going on. But then when it finally hit the international stage, was here in late 2010, as oil started hitting $100 a barrel. So with the protests and the violence erupting in the Middle East, the price of oil is driven up. What does that do to all the oil companies? BP, CVX, XOM. Their profits end up increasing as a result of the higher prices of gas and oil products. Then you've got the spring of 2011, as the market was driven up as far as it was. Look in this area here. What happened in this drop-off? This would have been March 11, 2011. So we're talking from here. Here's a doji, this down candle, and the subsequent loss from around 13.15 until a low of 12.50 or so. This was the Japan earthquake and tsunami. So the market gets beat up based on the effects as the days proceeded, and we began to think about an earthquake in Japan, the shutdown of all the factories, and what that would mean to companies who had their things being built in Japan. Apple, whether or not Apple would be able to deliver on their iPhones. This is well before the iPad issues started, or maybe even the first iPad might have been around this time. You had car manufacturers being affected. Toyota, for example. In fact, trying to think, Toyota's TM is Toyota. And let's see if they kept this in the same date range. Looks like they did. So here's March 10th. A doji here. Then you've got the gap down, the gap down, the gap down. And Toyota just getting beat up here, coming from close to $90 a share all the way down to $78 a share in just a couple of days. And look where it is today, $112.50. So you could have picked it up if you're an investor and you hold things for a while. You would have it down here in the 78 range, which is not even the 20-year low according to the chart here. Let me see if I move this back a little. So there's that low, and then you got it staying above the 200 period. Without going into the complete economics of Toyota, but here's a drop through that. Looks like they had some earnings miss here in late 2011, to be expected after what happened with the earthquake. And then you have them bottoming out down here around $60. So here they have nearly doubled in, let's call that a year and a half, if even that much, from November 2011 until today. Nearly at 120 from that point. And here they've reached a high of 113.62. which is still not even their 20-year high, but still quite a high. What other kinds of disasters, or tragedies should we say, have occurred? Let's go back to the SPX. Okay, and we were looking at 2011. We had the Japanese earthquake in March, and what happened after that? Look at this drop off. This is in from July 26th or so down to September 19th, and all this up and down that occurred in this window here. Let me zoom in. Do you remember this falling windows? I don't know what you call this as a candlestick pattern, but this drop off here, this was partly to do with the Eurozone issues, and partly to do with the S&P downgrading the United States. And the market ended up absorbing that and driving down all the S&P stocks until we got down here at about just under 1100. Seems so long ago, but was really less than 2 years ago. The S&P getting killed here from a downgrade of the U.S. government, and that was all those debates about the budget and about the financial crisis and the bailout and what are we going to do, etc., etc. All these people out of work. Then you had these 4 days in a row, these crazy trading days. And if you're like me, maybe you remember going through this, I got killed in here. And that was just because with the news coming out, they would announce, this was tied in with the Eurozone, they would announce one day that they've come up with some money, billions of dollars is going to get loaned and everything's going to be fine. And I'm sitting there going, well, that's just ridiculous. That's just kicking a can down the road. That's where we had that phrase, vernacular, going around. We're just kicking the can down the road. Well, the market rallies, and I'm too dumb to close out my trades, and I end up holding on to them until I get stopped out. And then what happens the next day? They realize, oh, wait a minute, we're just kicking the can down the road. And then boom, it all comes crashing back down. Too late for me. But and then of course the next day they're like, well, I guess it's not so bad that we're kicking the can down the road. So then we had this sideways action in this trading range here for several weeks until you get to over here with this low candle in the summer, or I should say in the fall of 2011, which is when the Eurozone fears were intensifying. And then what happens? Well, stocks are at a bargain. They're down here, the S&P at least, at 1,074, 1,075. That's a bargain. Things start getting bought up until it rallies from there. Let's go to the late October of 2012. What happened in this drop off? Now, this was the election cycle, and here's November 2nd, which I believe was election day. I don't have a 2012 calendar with me, but here you had all the battling about what was going to go on with the Congress and the Senate and the back and the forth. And even after the election, you had this drive down as all the news is getting absorbed. And all that continues on until we reach a point where everything's on sale down here at 1343, and then it gets bought again. And here you can see as we move across, there's no stopping it. And we entered into what's really the recent bull market. I shouldn't say we entered into it then, but in general, the bull market has continued. Here we are, well past our 150 and 200 period moving averages, despite the sell-off yesterday and the retracement today, and we'll see what tomorrow brings. But the point is that when it comes to tragedies, the market does trade tragedies. Now, what about big tragedies? What we may consider to be the kinds of tragedies that last in our memories for a very, very long time. I say the Arab Spring to you. I don't know how many of you even heard that term before, or could even tell me when it occurred. But if I say 9/11 to you, you see that has a greater impact. I don't even have to tell you the year. That's how great of an impact it has. I just say 9/11. Now, since we do have a 20-year chart here, I believe this will let me go back to that time. And let's see. Here's the 90s. 99, the aughts. And here it is. So, now I wasn't trading daily back then. I was more of an investor, I guess, really. But here you have the 7th, the 10th was a Monday, and the way the charts are set up is to create no gap. But you go from the 10th to the 17th on the chart, missing the whole week in between. From Tuesday, September 11th, 2001, and into the subsequent days of trading, where it got down to a low of 944.75, coming off of somewhere around 1100. Now, when the markets opened back up here on the 17th, what kind of trading was going on? A lot of shorting. Now again, I didn't do a lot of research on this beforehand. Didn't have a lot of time to do that, but considering some of the other events that I've seen things happen where they put restrictions, for example, on shorting, but a lot of that stuff wasn't in place back then. So here's a day of shorting, likely, that just ran for the whole day. It drove the market all the way down. You hardly have any wicks. You opened here, right at the previous open, there's no gapping, and you just sell all day long. A very small wick at the end here, which very likely could just be a small push-up near the end of the day, but hardly any wick at all. That's how strong of a trend that was. But that was many people trading a tragedy. And this is the S&P. Of course, back then, aside the fact that there were those who knew about the events beforehand and traded the tragedy in a different way, those who learned of it after the fact, what kinds of stocks would you look at? Maybe airlines, maybe short some airlines, maybe go long on some security companies. A company like Halliburton, let's say, who does a lot of security work. Let's see if I change the chart here, if it happens to match it up. And here they are dropping off that day, pretty much like everything else, down to around $10 a share. And yet today they're at $39 a share. So perhaps in the short term, I don't know how much of their involvement was known. Here's an interesting candle at the end of near the end of the year. So it got to as low as $4.30 on a 20-year chart. That's a 20-year low in late or early 2002. So that's just an example. It's kind of hard to do the airlines because they've all merged since then. And here's a chart. It just jumped me ahead to 2009. So they probably don't even go back that far. United Airlines with the mergers and all. Yep, it's kind of stuck there at 2006. But the point is that when tragedies occur, there are some things that come to mind. When something happened, for example, yesterday, as a trader, do you take the position and say, well, I'm just not going to trade anything, I'm going to just walk away from the markets today? Well, you might very well do that. And there's many who might do that. They might do it on ethical grounds, or they may simply from knowing that they won't be in the same frame of mind, the same psychological mindset, that they don't feel like they're healthy enough to be trading today, for example. And so they might consider just stepping away from the table. It's the same advice we give traders that have lost a lot of money in a trade or in a few trades and start building up bad trades. The recommendation is to shut the platform down and go for a walk, do something different, and come back tomorrow. On a bigger scale, and let me just pause for a second and see some comments. Someone mentioning yesterday, I waited near the close and bought, figuring there would be a rally today. There you have it. Let's look at the ES, for example, which is currently down in this session. But if we look at the candle from the past couple of days, so here's this drive down, and much of this took place near the end of the day, the last hour or two of trading, if I remember correctly. And in fact, let's see, I can switch over to an hourly chart. So here's the final few hours. This should be 5 o'clock, so 4, 3, 2, 1. I guess really there was a drop-off anyway taking place, and then the tragedy just kind of drove it further. Kind of drove it further from around 1550, let's call it. No, let's not call it that. Let's call it 1560 down to 1540. So 20-point move in the last hour or two of trading. So, the question is, do you go long on this final candle? It's not quite a doji, but you do have just basically an equal size wick on the top and the bottom, kind of indicating that the bulls and the bears were in even strength there, even though you do have a wide body. So not a strict definition there. But certainly, if you went long at 6 o'clock when the market opened again, right from this candle into today, you picked up 20 points on the ES. Translate that into 1,000 other equities that you could be trading, and you have yourself millions, if not billions of dollars of gains based on that concept. Even after this pause here midday, you have complete gains. Look at the moving average getting skewed here from the change in price. Now, I talked to a couple of traders on an interview a couple weeks ago. You might remember our friends from the Netherlands. That would be I'm Short Your House. I don't know if he's here tonight. As well as Dutch windmill, and we talked to them a little bit about the international perspective and trading around major events, and I brought up 9/11, and Dutch windmill talked about the exchange and about the brokerage firm. And if he's not here, forgive me if I'm misstating his comments, but what he talked about was about his involvement, his family's involvement in some kind of a bank or brokerage. Again, I don't remember the exact reference, but when 9/11 happened, of course, immediately there was a miscommunication about what's really happening. Obviously, with the New York markets being shut down the way they were, and the news kind of being disrupted. I mean, even here, I live in New Jersey, and I work in New Jersey, and I was at the time. And even for myself, when we first heard about this, and I went to National Public Radio because I just knew their website, couldn't get on some of the other websites. There was just too much traffic and things were crashing. But I went to NPR's website, and they had a picture of a small prop plane sticking out of the side of an office building. And what I know now is that that was just stock photo from another event. But for several hours, I went under the assumption that that's what was taking place at the World Trade Center. And we got some links put in the room there from Dr. Gass for you guys to take a look at. So what he said, what Dutch Windmill said, was that they made a call to the exchange and they said we should shut down. And the pushback came that we can't shut down. If we do that, we're gonna give in to the terrorists, and it's just what they want. And of course, the argument was that a fair market was not there. That with the loss of the New York traders and the New York exchange, you didn't have a equal and fair market, and that's really what the trading is about. That's what all the systems that get created and put in place, supposedly, are there to create a fair trading market environment. And the opinion was that it just wasn't working that way. And the final decision was to keep them open. And someone shared with me in the room earlier today, and I don't know if they're here. I won't mention who it was unless they want to volunteer that information, but they mentioned that someone that they knew who knew a broker who got a call from a client at 9/11 during that time. I don't know if it was in the week after or whatever, or if it was international trading, but they were asked to short the market. And this broker refused to do it. Now, I don't know all the circumstances, I don't know the legalities of it, but just thinking that through on the surface, let's say it was a broker trading S&P contracts, and someone calls in, could be Paul Tudor, for example, Paul Tudor Jones. What if he called in and said he wants to short 2,000 contracts of the S&P, and forget about who he is, who he represents as a trader? Would you take that order, or would you feel like he's taking advantage of the situation in an unfair and possibly unethical way? Or would you see it for being a simple market play, that no different from a company who announces terrible earnings and their stock gets trampled, and then you pick it up on sale and you ride it until it goes back up again? Let's take a look at a company like Google, for example. And we're on an hourly chart. Let me get to a daily. And let's zoom out. So, for example, back here is October of 2012, I believe. And in fact, I even have a note on here. Google earnings released midday. Be cautious in weighing this candle. That was a note I put to myself, because typically when Google's earnings came out, their candles, they had some kind of a gap to them. So this day, possibly in my mind, added a little bit of panic selling to the trade because the earnings were released in the middle of the day, or at least near the end of the day. And so we still had the drive down, but there's no gap. Anyway, you have Google trading from here up in, let's say, $750 a share, and in 2 days getting pushed down to $670 a share, and subsequently all the way down here in November. So is this a tragic event? Bad earnings? Earnings miss? If you were to pick it up here at let's call it $680, you're over $100 from that point. So on 100 shares, $100 a share is possible. If you did options, it would be even more than that. And earnings, by the way, are coming out this week, the 18th, Thursday, after market closes. Always like it when they're coming out week of expiration. Options expiration. So, those are just some thoughts there. In reality, is it taboo to trade tragedies? It's really what has been driving the market for probably since it began, is tragedies. Knowing about when they occur so that you can react to them in your trading. Technologies like Twitter and Facebook and StockTwits, and now we have financialjuice.com. These technologies have come about in a way to enable this kind of trading, and their use has become a continued event because of there being tragedies, and basically they're being able to facilitate the dissemination of information in a quick way. And the more that is accepted for use by traders, the more that it'll be used, and therefore it kind of feeds into itself. You know, the old chicken and the egg concept, but it just continues from there. So, from what I can see, the market has always traded tragedies. You as an individual trader, however, it's up to you to decide whether you'll participate in that trading during such tragedies, and on whatever level you consider the gravity of a tragedy to be something that is unethical to trade, or simply a unconscious, or maybe unconscious is not the word, but a separation of yourself from the event, and simply to trade the market as you see it in either a technical or fundamental way, and with the intention, of course, to profit from that move. So, I thank you guys for checking in. I appreciate the folks checking in the room. If you put my name in the room with a capital B, it doesn't ding for me, so I didn't notice. A couple of you guys made some comments. Someone mentioned a book here called Trend Following, that on the day that JFK was assassinated, the market took a dive and then rebounded to close higher. So another example, thank you for sharing that, of a tragedy that folks trade off of. And it really is not going to end. This event in Boston is certainly a terrible tragedy, but unfortunately, the way these things are, it won't have the same impact across the world as it is having amongst the people living there in Boston. It's just the way things are, and actually even another type of tragedy that I forgot to mention is natural disasters, and I know we talked about earthquakes, but even things like floods and storms and cyclones. These things affect crops, which drive up the prices of corn and rice and wheat and coffee. So when you read the news, if you're trading those things and you read in the news that these there's a drought in the Midwest, or there's a disease that affected thousands of cattle, for example, well, those are events that you can trade from. And maybe we feel a little bit disconnected from the tragedy when it's something like that happening in Bangladesh from us here in the United States. Or maybe if you're a trader that lives in another part of the world, let's say you live in Bangladesh, and you hear of an event happening here in the Midwest or on the East Coast, Superstorm Sandy comes plowing in and leaves thousands homeless. And maybe to you, that'd be trading Home Depot or Lowe's or KB Homes or Pulte is not a big deal. So there's always going to be those sides of the story. So again, I thank you for tuning in to Briguy's Tools of the Trade. I hope you enjoyed the show and didn't get any other contact. I hope I didn't miss any of your thoughts and comments. I'll be posting this in the room, so in the members forum, so if you guys wanted to refer back to it and share any of your thoughts, you're welcome to do that. Of course, with the events from yesterday, our thoughts and prayers go out to those affected by the event. As I said in my posting on the homepage, to me, I feel like it's those that who are in Boston affected directly, but to me, I feel also those that have experienced tragedy in their life in one way or another, that all of this gets called back to mind when they hear about it happening again. So I feel for you, and I hope in whatever way that you can find some comfort in where you are. So thanks again for tuning in, guys. This is Briguy's Tools of the Trade. Thank you for tuning in here to daytradingradio.com, and we'll see you next week with another show. Good night, guys.